What's up everyone, it's Caddy with MoneyVest. So in this video, I wanted to go over the Magnificent 7 technical analysis to kind of help you in the upcoming week to place trades for, again, trading opportunities, go over very important critical levels to watch, support, resistance, supply, demand, everything that we're going to go over in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time, and also drop a like and also join our Discord and our Patreon. You do get access to over 50 plus members only private videos, including my 30 stock shopping list, my entire buy targets, my fair values, our MoneyVest index, and a lot of other trading alerts channels, including investing alerts, of course, options alerts, trade ideas. Everything's going to be included. So link's going to be down below. The first week of the month is the best time to join. And also we do have a huge sale on individual courses, fundamentals, technicals, options, and psychology. The coupon code is going to be May50 if you want to take advantage of that, and that is going to be 50% off for all the courses. So link's going to be down below, and also do connect with me on Instagram. My handle is going to be CASWRP. So starting with Apple, and I did a whole dedicated video on Apple over the weekend, so definitely do check that out as well. But this right here is bottom line, the technical analysis. We do have the 3-tier support that we've been watching on Apple stock. The first one in the 170s, the second one in the 150s, and the third one, the most ideal and the perfect one, in the 120s for Apple. For the longest time, you'll notice that we've just been consolidating sideways in this first tier support. That's the green rectangle over here, and that's going to be in the 170s. Of course, we got a huge gap up after the earnings. Intraday, there was selling pressure, so green day but a red candle definitely does suggest there was some profit taking. I did a video on Apple, so make sure that you do check that out. But the resistance and the target is going to stay unchanged all the way up to $195 to as much as $200. This is still a trade idea that is in action. But of course, if we do see this gap that may or may not get filled, eventually gaps do get filled. 9 out of 10 gaps eventually do get filled. So this right here is the gap that Apple, of course, left after it reported earnings. Actually, this was a much bigger gap here. If we come down to fill this gap, that's quite all right. And this is going to be that support level in the 170s again, all the way down to the second tier support in the 150s. So that right there is going to be that next level of demand, all the way down to, of course, down in the tier 3 support here in the 130s, which was, of course, be ideal as a buying opportunity. I would basically going crazy at these prices for Apple if it ever comes down to that level. Talking about Amazon, so Amazon's next on the list of Magnificent 7 companies here. Now, I would personally be adding more shares and buying more, I would say in the 140s. So if I come up with the moving averages as well for Amazon, and that's the 200 SMA, you'll notice that it's sitting roughly in the 150s. So this would be a reasonable price for me to be a little bit more, slightly more aggressive to all cost average and buy more shares. Of course, the lower the better. Always remember, in investing, the lower the prices are, the better it is going to perform over time, because you're creating a higher margin of return and a lower margin of risk, right? So your margin of safety is greater at lower prices versus when you are overpaying or paying more expensive prices or buying at a higher price. That's why, again, oftentimes people are always questioning, why it's not the time to buy, or why it's the markets are overvalued or trading at a premium. It's because that they're already moved up 20, 30, 40%. To give you a very simple example is, if you really compare the MoneyVest index with how the markets have performed, what's a better buying opportunity, right? When the index comes down to 2.2, or when the index is at 4? Where would you actually be deploying more cash, buying more, be more aggressive in the markets? Where exactly, what point would you be more aggressive? It should obviously be, right, at levels when the index is lower, when the markets are lower, right? That's what this tracks. And when the markets are at an all-time high, when the markets are ripping up 20, 30%, and the index is almost as much as 4.5, closer to 4.2, then of course, it's not the time to be going crazy. It's not the time to be dollar cost averaging or buying aggressively or start deploying tons of cash into the market, because you'd be paying a premium. You'd be buying at a price which is already moved up 20, 30% from its lows, and you'd be overpaying for that stock, for that investment, right? So this is a perfect chart to look at it, right? So every time we've seen that correspondent with the MoneyVest index trading at lower levels, the markets have sold off, and then of course the following increase in the price has been very, very strong. So it's really that understanding of risk and reward. And look, great investing is not about making a lot of decisions. right? So great investing and making long-term profits and returns is not about making a lot of decisions. It's about making the right decisions, even if they are fewer decisions to make. That's what it is. And those are some of the hard lessons I learned. And I still understand that some of the newer investors and beginner investors feel like they should be doing something every day, feel like they should be trading and making decisions every day. They should have multiple monitors in front of them. Unless, of course, you're day trading or swing trading and you've got a very specific strategy that you follow, that's all well and good. But if you are investing for the long term, just always understand it's not about how many decisions you make. It's all about making the right decision when the time is right. And again, this is not about timing the market because we're not trying to pinpoint the top and the bottom. It's just an understanding of where the risk reward is good. If you want to buy dollar cost average into broad-based ETFs and index funds, that you want to hold for the rest of your life, then by all means, regardless of where you buy, it is going to be completely fine and the probability of success is very, very high over the long term. Even then, I would still argue that at some levels you can maybe, be more aggressive, and at certain points you can be not so aggressive, right? At prices when they're lower, when the markets are down 20%, then of course you want to deploy most of that capital because you're going to be buying more shares for cheaper. But of course, when the markets are higher, then you want to revert back to your normalized dollar cost averaging sort of schedule and frequency, and of course the dollar amount as well. But again, the idea is understanding risk reward, understanding when and where it's actually favorable to be buying more versus buying a little bit less. And that's really what our strategy, our analysis kind of tailored around. Now for Amazon, resistance is going to stay put at 188. Support level is going to stay put at 170, down at 159, down at 143. So those right there are going to be some levels to watch for Amazon. Now going over to Tesla. So Tesla here on the day, of course, we did talk about Tesla as well. I did a specific, very detailed video on this company as well. Support level is going to stay put at 174, 175. I think the premiums are very solid for Tesla, both on the call and the put side. And if it does end up, let's say, breaking down below this, the next support is going to be down at 153 for Tesla, where I would be looking at selling puts once again down in the 120s and 130s for this company. We do really need to see a breakout above $200 for Tesla to kind of regain that momentum and possibly trade back up to 232 as much as 289, 290. So of course, this week we'll find out if Tesla can break out above this level. And next week we've got inflation numbers. So lots of things to unpack in the coming weeks here. Earnings season is still ongoing. We've got lots of companies reporting. NVIDIA is also going to be reporting later this month. But for Tesla, keep a close eye at 174, 177, aligned with this sort of support here. And again, a huge supply, huge resistance, wall of supply here in the 200s. If it does trade back up to, let's say, $200, then I'll be looking at selling calls once again in the 230s and 240s for Tesla. Talking about NVIDIA, and NVIDIA here also moving higher. So the thing is that it was trading in a downtrending channel. So lower highs and lower lows. Then it got a little bit of a breakout beyond this previous resistance. And the next target and resistance can be pretty much at $909, $910. So this right here is going to be that level to watch for NVIDIA, of course, and support level is going to stay put down at 845, down to as much as 741. Again, valuations are expensive, premium valuations, and a lot of people argue that, hey, NVIDIA is trading at 30 times forward earnings. It's not really that high. Well, that's because earnings expectations have gone insane. People are expecting NVIDIA to generate almost $100 billion in profits here very, very soon, which is actually quite crazy. And if NVIDIA continues, if NVIDIA underdelivers on those over promises, then of course there's going to be huge repricing. Their expectations are going to come down. And that's what happens, right? Expectations move in extremes. And what I mean by that is when Meta was selling off down to $80, expectations for Meta earnings were so dang low, right? They were so low that people thought that Meta was actually going to turn into a loss-making company, right? And then eventually they turned things around, and not only turned things around, because expectations were so low, they came back up, they were revised back up, and hence the stock price appreciation of 300%, and of course recovering back to all-time highs. And same thing I think is true for NVIDIA, but on the other side, the expectations are way too high for AMD and NVIDIA, that if there is any type of, let's say, disappointment or underdeliver earnings on these companies, then of course there's going to be repricing. And the growth rates are going to normalize. We're not going to see 400% or 500% growth forever. I think it's really important for us to remember that as companies get bigger and bigger, growth rates come down because it becomes that much harder for companies to actually grow, right? So This right here, lower highs and lower lows. So we're seeing a little bit of that momentum higher. Resistance is going to stay put at $905 per share for NVDA, and support level is going to stay put roughly at $844 for the company. So moving forward to Meta platforms, and Meta here also seeing a little bit of that momentum, but we've got a huge wall of supply. So if you do hold shares and if you've got a lower cost basis, Meta, if it does push higher, I mean, there is an opportunity for you to sell calls in the 500s, considering that there's a huge wall of supply, massive resistance in the 450s, 470s for Meta. And in my opinion, it is going to struggle at those levels. I mean, there is going to be a huge supply resistance, like I said, already testing those levels, and support levels going to stay put down to 386, down to as low as that 200 SMA in the 375 for Meta platform. So that is going to be that resistance to keep in mind, all the way up to as much as 513 to 530 for Meta platforms as well. Talking about Netflix, and Netflix here also moving higher very nicely, up 2.5%. Resistance is going to stay put at 595, 600. So again, if you do own Netflix shares and if you are looking to make some money here on a passive basis, there could be an opportunity for you to sell calls in the 600s, because again, there's going to be a huge supply and a resistance in the $595 to $600 range, and of course a massive gap to fill for Netflix down in the 500s, with that 200 SMA sitting at 490. So in my opinion, I think Meta and Netflix and even Google, some of the more advertising and comm services stocks here, are starting to move higher. There is momentum higher for these companies, but there is going to also be a huge wall of supply. I mean, Apple is coming up to that supply in the 190s. Tesla's coming up to that supply in the 200s. Amazon's coming up to that supply in 188. Then we've got, of course, Meta Platform is coming up to that supply in the 470s. Netflix is coming up to that supply in the 600s. So markets are, of course, dropped here. We did see a correction for the NASDAQ. For the S&P, maybe not so much. We did see a dip, and then we started to recover back higher. But we're not out of the woods yet. We're not in the clear, because we are still approaching that level of resistance here. So really next week, and of course the following weeks, we're going to see whether we get a breakout or whether we get a rejection from those levels. Microsoft, on the other hand, also same story, got a bounce right back higher from 390s. We did drop, I would say quite reasonably well, down about 9.6%, so almost in a correction territory. And once again, now we're approaching that resistance here in the 417, 416. That's going to be the level to keep in mind for Microsoft moving forward. If we do end up, let's say, breaking down further, then yes, my support level and my buy targets are much lower, much more preferred, ideal in the low 300s for Microsoft, where I would be loading the truck, backing up the truck, and absolutely loading it up with Microsoft shares at those prices. Google, on the other hand, is the only stock that is pretty much trading near all-time highs. Support level is going to stay put inside this green rectangle in the 150s, as we have discussed, down in the 130s and 121 for Google as well. Very much in the context of this uptrend, very nicely making higher highs and higher lows. And like I said, support level is going to stay put at 150, down in the 122s for Google as well. So very, very nice momentum of higher highs and higher lows for Google at the moment. So hope you all enjoyed this video, and a quick update on all the Magnificent 7 companies here. The bottom line is that there are specific buy targets that I have, specific intrinsic values that I'm watching for these companies. And of course, we went over the support and the resistance levels as well. Let me know your thoughts down in the comment section below. And again, we are going to be sort of restarting our live streams, market open live streams here very soon after the software is developed and my time is kind of freed up from the work that we've been putting in. So again, if you want to join, be a part of our MoneyVest community, link's going to be down below. Join and take advantage of those discounts while they last. And also the May 50 is going to be the coupon code for all individual courses. And do connect with me on Instagram. My handle is going to be CASWRP. As always, happy investing. I'll see you all in the next video.